Introduction to Fundamental Reporting, Part 3 of 3, Fundamental Reporting Mechanics. If you've watched Parts 1 and 2, you now understand the importance of focusing on fundamentals, and that reported figures like earnings do not tell the whole story. In this video, Part 3, we explain the mechanics behind fundamental reporting and how it comprehensively summarizes the fundamental performance of your equity portfolios. We also explain how you can use the fundamental reporting tool to generate your own professional-looking reports. In particular, we believe these reports will help you retain and acquire more clients by providing them with the peace of mind that comes with being able to look past market volatility and directly monitor the more stable fundamentals. Fundamental reporting takes the shareholder perspective. When you buy a stock, you obtain a fractional ownership in a company. This company will typically own a variety of assets like factories, buildings, equipment, inventory, and cash, assets they use to make a profit. In most cases, companies will also borrow money to finance their assets and operations. As shareholders, we effectively own the difference between what they own, the assets, and what they owe, the liabilities. This difference is sometimes called shareholders' equity or book value, but we like to use the more descriptive term net asset value or NAV. Accountants and analysts keep track of assets and liabilities in a balance sheet. Assets are on the left side, liabilities on the right side, and the difference, typically shown as the bottom right corner, represents the net asset value attributable to shareholders. Indeed, net asset value is critical to shareholders as this is where all future profits end up and dividends get paid from. As we explained in Part 2, management decisions can significantly impact the structure of a company's balance sheet. In particular, they can impact how much net asset value is left for shareholders and how it is divided up. In order to capture this impact, fundamental reporting cuts to the chase by directly monitoring what net asset value is left for shareholders after both profits have been booked and management has effected any changes. Instead of listening to what profits companies or analysts claim they make, fundamental reporting keeps track of what shareholders ultimately end up with by monitoring three specific factors. Think of a company's net asset value as a pizza, each share of company stock being a slice of the pizza. The first factor fundamental reporting monitors is net asset value growth. If a company makes profits and grows its net asset value, the pizza grows, so your slice gets bigger. The second factor is your percentage ownership interest. If the company buys back its shares, the pizza is effectively cut into fewer slices, so each slice is wider, representing your increased ownership interest in the company. Of course, companies can destroy shareholder value as well. Losses or dilution can make your shares smaller, effectively having the opposite impact by making the whole pizza shrink or your slices thinner. These two factors, net asset value growth and ownership interest, keep track of the value generated for shareholders that is kept within a company. But some of the value created for shareholders is directly handed over to shareholders in the form of dividends. This is the third factor fundamental reporting monitors. This reduces the net asset value of the company, but it goes right into the hands of the shareholders. At the end of the day, these are the only three places company profits can end up. So, keeping track of these three factors is the only way one can monitor the total value companies actually create for their shareholders, including those management decisions that don't show up or take years to materialize in reported figures. The bottom line is this: fundamental reporting provides the best lens with which investors and investment professionals can look past volatile share prices and monitor the true fundamental performance of their equity portfolios. So, how can you get fundamental reporting? Fundamental reporting is delivered via a web-based service. You just upload your portfolios, and the tool generates professional-looking custom-branded reports that you can analyze and share with your clients. Please visit our website to sign up for a free, no-obligation trial so you can take your first step toward a more comprehensive and refreshing reporting experience that will help you acquire and retain more clients.